Today, Ether's biggest holders prepare for post-merge volatility. Coinbase launches a voter registration tool in an effort to elect pro-crypto candidates. And BitGo CEO Mike Belshe sits down with us to talk crypto volatility, regulation, and Galaxy Digital. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies turning sharply lower this morning after a hawkish speech from Fed Chair Jay Powell. By noon Eastern, Bitcoin fell to $20,000, Ether plummeted to $1,500, and Solana tanked by nearly 7%. Cryptocurrencies were headed for a positive week, but today's losses put Bitcoin down more than 4% in the past 7 days, and Ether down 8.5% in that same time. All right, on to the top stories. And let's start by talking a little bit more about that bearishness among some of Ether's investors. Now, the token has had a pretty positive run in recent weeks, but as the Ethereum merge approaches, skepticism around that upgrade is taking a toll on futures prices. As of late, futures for Ether have been trading below spot prices or the current cost of an Ether token, meaning that investors aren't all that optimistic about where its price is headed. Meanwhile, recent data also shows that some Ether whales, so those major holders of the cryptocurrency, have been moving a significant amount of their holdings onto exchanges. That typically happens when holders are looking to exit their position, which also points to more of a bearish outlook. Next, Coinbase wants to register voters in favor of crypto-friendly candidates. The digital assets exchange just launched a voter registration tool, and the company's chief policy officer called this year's midterm elections the most important in crypto's history. Coinbase also set up educational resources to teach users about crypto and lawmakers' views on the industry. Coinbase launched this new initiative despite the company having an apolitical culture. Remember that no politics mandate rolled out following nationwide protests over the murder of George Floyd in 2020. Finally, the SEC just delayed its decision on another Bitcoin ETF. VanEck submitted an application for a Bitcoin spot ETF back in June, and the SEC was supposed to make a decision by Saturday, August 27th. But the regulator extended that review period by 45 days. The SEC has been critical of spot Bitcoin ETFs, saying there are risks of market manipulation. This also isn't the first time VanEck has applied for approval of one of these ETFs. They've been trying to list one since 2017. Okay, for our main story of the day, Crypto World's Tanea McKeel sat down with BitGo CEO Mike Belshe to talk about U.S. regulation, the state of crypto markets, and Galaxy Digital's decision to end its $1.2 billion acquisition of the company.
Mike, thank you so much for joining us in studio. It's great to see you. Let's start with Galaxy. Get that out of the way, specifically those headlines that we saw earlier in the month about the company backing out of a deal to buy BitGo for $1.2 billion. Last we heard BitGo was seeking $100 million in damages over that deal. What's the latest there?
Well, look, I'm not going to talk a ton about that. Actually, it's not even that interesting, to be honest. Like, we're ready to go and build our business in crypto. We've been doing this for 10 years now, and we've been through a few ups and downs. One of the great things about the digital asset space, it combines the innovation and rate of change that you've seen with Silicon Valley on a global landscape with money. And it just turns out it's an ever-changing space, and so we see a lot of things like that deal, not quite working out the way it had originally been planned. But it's been a long time, and the markets have changed, and so we're looking forward to moving forward.
It's pretty soon after, of course, but are you open to other deals in the future, or are you open to working with Galaxy Digital specifically, again, in the future in some other capacity?
Well, look,
Focused on building BitGo on its own.
Look, I'm the steward for the shareholders, and we are building investor value, right? So we will always pursue whatever's the right thing for the company, the firm, and our investors. And I don't have any problem with that. Now, in terms of what I think is going to happen next, look, BitGo's been a stalwart in the crypto space, and I think that's going to continue. We've got some, I think, pretty good opportunities around some M&A that we might be doing. There's a number of companies that we've grown friendly with over the last 5 years, and we built good relationships, and I think we can find some adjacent businesses that really work well. Custody is a huge component of everything that's happening inside of crypto, and you're seeing a lot of intersection now with regulators and crypto, and they're saying, like, wait a minute, how do we make a stronger market structure and BitGo plays a critical role there. I think we're the only ones really coming at it from a completely independent lens.
Okay, well, let's turn to markets now. It is a big market day. We have seen the crypto market, with stocks and other risk assets broadly kind of climbing off of their mid-June lows. They've been in a little bit of a slump lately, I think, largely thanks to the pullback in Ether. I think with the merge coming up, we're kind of looking at a bit of a sell the news situation. But what do you make of this pullback right now, this little pullback from the bear market bounce? What is holding us back at this moment?
Well, I think it's the macro markets largely driving what's happening. There are some temporary ups and downs with particular speculation around the Ether merge, which moves from proof of work to proof of stake, which is an exciting time and big change. So there's people making bets on that cause some volatility there. But in general, this crypto market is really about what's happening in the larger landscape. So, Fed Chairman Powell today announced that he's going to continue just pushing the interest rates. And one of the things about digital assets that's interesting is that people look for it to be a decoupling, something that is not correlated to traditional markets, and yet we see again that we see a swing kind of going in the same direction. I think this continues for a while, but ultimately there's a lot of belief, and I think we see on the sidelines a lot of investors ready to enter into the crypto space because they do believe that long term, actually this does start to decouple.
When do you see that decoupling happen? What are some of the signs that you're looking for? Obviously, there are a lot of new institutional investors that care about the short-term movements of crypto, so that is kind of, making the price movements look the way they're looking today. Is it inflation, and does it become a question of, whether inflation has peaked and, we kind of have a sense of what the Fed is going to announce at their next meeting? What is it that we are looking for in order to see that decoupling, and how many years out do you see that happening?
Well, I think in general, we've always thought in the crypto industry that adoption and uptick would be faster. And I think the industry has underestimated a little bit, how systemic that regulatory structure is, and how much work it is to build something better. Now that's been happening step by step and brick by brick. In the early days, we really thought that some of the incumbents would adopt digital assets and crypto faster than they have. But the regulatory burdens have become strong. And then we're also starting to see the emergence of where we know this is really ultimately going, which is about power. There's a control over what is the future of finance and what is money going to look like. And different people have different views on what that should be. I think that as the state continues to do what it's doing, we're going to see a few more places where humans make mistakes in the monetary policy. It happens historically, over time, every time. Unfortunately, humans are not as good at keeping rules as we wish we were. And computers can do that faithfully and safely with complete consistency. So I don't know when we're going to see that turn where you start to see a new monetary system take off, but I think a lot of people are seeing it in terms of what's happening with monetary policy. And so whether it's 5 years or 10 years, I don't know, but it's coming.
I want to keep talking about regulation, but I first want to ask you a little bit more about the Ethereum merge that's coming up. A lot of excitement around that. Are you excited about that? And like I said, it seems like there's been this big price run up and there could be a sell the news situation going on here. So how excited or interested are you in the Ethereum merge itself, in that tech transition? And how do you see it affecting markets after it's completed and through the rest of the year?
Well, I think it's a huge milestone for the Ethereum product line, so I'm very excited about it. I'm a big proponent of anything that's innovation. So it's great to see different methods being tried for what's the right type of blockchain to build. Now, all of the blockchains are still a bit of an experiment, and probably to some degree always will be. Sometimes you hear people say we're still in this grand experiment of democracy, and yet we're 200 years into that here in the US. So it is a bit of an experiment in terms of figuring out what works best. And proof of stake has some particular unknowns about it. Does it lead to a centralization of power or centralization of control? Some people say yes, some people say no. Look, regardless, it's a huge milestone for the industry to have Ethereum taking this step. It's part of a number of steps that are coming in terms of scalability and future rollouts. So people are betting on the ups and downs of the short term. I'm much more interested in the long term. And having competition of different ideas and innovations going in different directions is going to prove out which ones are the best.
Like I mentioned earlier, as we've been climbing off the mid-June lows, and with the Ethereum merge coming up, there's been a lot of excitement around Ether, which I think has been gaining since we saw all of these institutional investors jump into the market. Do you see that shift that some people have talked about in leadership? Bitcoin has led the crypto markets for a very long time. It hasn't really been for the last few weeks, but do you see it regaining that position? Or do you see Ethereum's leadership or Ether's leadership kind of continuing for a while here after the merge and while Bitcoin is still so tied to broader risk assets and what the Fed is saying?
Well, look, the different blockchains are tackling different types of problems. And maybe Bitcoin's greatest feature is that it just doesn't change. If you're going to put $1 billion into a brand new monetary system, do you want to have a system that is subject to potentially unpredictable changes that are upcoming from a relatively small number of people? Or do you want to go with the one that you know isn't going to change and is going to be here 10 years from now and you're going to be able to get your $1 billion back out? The large money is going to continue to go there. Now, there's a ton of new work that can be done. You talk about DeFi and smart contracts and how some of these things evolve. You know, these are technologies and use cases that are starting to prove true. And this is where we start to figure out, oh, wait a minute, how do we replace broker-dealers with automated market makers? How do we create new lending platforms that are safer and more transparent? Bitcoin doesn't offer that natively. There's some work. It could, over time, have some extensions, layer 2s, to handle that. In the meantime, Ethereum's ready for that now. So I think a lot of what's going on is probably just pure price speculation, to be honest. But there's two different use cases. Look, Bitcoin's going to remain the king absolutely on the value store for probably a very long time. I don't think that there's even a near second place. In terms of innovation and things that are changing, well, we got a lot of competition there between Avalanche and Polkadot and Ethereum. And there's even a bunch of new ones that are still coming on board. So we'll see what happens in that space.
All right. Let's talk about regulation now. What areas of crypto do you see getting regulated first? And are those necessarily the areas that you think need regulation most urgently?
Well, look, we're all regulated today. So BSA, AML, KYC, understanding what transactions you're doing, these are things that we are already subject to. And in fact, I think if we can figure out ways that the regulation does not have to be specific on a per asset type, it's going to make it a lot better for investors and for Americans and, frankly, for the world. Nonetheless, there is a desire to push for more regulation in certain areas. So one that I think is fairly clear would be stablecoins. Look, we haven't had this idea of a completely openly tradable token which is backed by dollars. And we have a lot of risk if the folks that are holding those dollars are not holding them in a completely transparent and straightforward fashion. So some do a different job than others in terms of audits and whatnot. I think regulators can help make it very clear exactly what backing stores so that people know that it's safe, right? We don't want to have investors burned by a mistake made by a relatively small number of people. So stablecoins, I think, are certainly up for grabs or very near term. Then in terms of securities, I think we would love to see clarity on what is a security and what is not a security. I also think the US has an opportunity to lead here. Unfortunately, we have so many countries, we've got a global financial system, and yet we don't have an ability to interoperate very well. So if the US takes the lead on really helping define like what is a security and what's not, and if you ask any 5 lawyers about a particular circumstance, they'll give you 5 different answers as to whether something is a security. We need that clear. If we make it clear, we can lead it out through the world, and I think it's going to make a much easier place for us to navigate new financial products.
All of that makes a lot of sense to me. Is that how in line is that with what your clients are saying? BitGo works with a lot of institutions that have said for a long time, you know, there's just so much regulatory uncertainty. What have you heard from them?
Well, clients come to us to help sort this out. So there's a lot of confusion. People haven't had to think about what is money, what's a commodity, what's a security, you know, for a while. And yet crypto has kind of thrown the door open on what are these things and how do I manage them. So BitGo is a regulated firm. We take fiduciary responsibility for our clients, and they want that. They're wanting to know that they're working with a firm that's going to take the utmost care in ensuring that we're abiding by all of the rules and regulations of the land so that they can do their investments or build their businesses or whatever it is without having to feel exposed by the partners that they've chosen to work with. I would say the institutions are all looking to do it right. There's nobody that's looking to side skirt this stuff. They're looking to us to solve that problem, and then we provide those solutions.
To what extent do you think, because as you started this by saying everyone is pretty much regulated today, and something we hear a lot, as I just said, is that there is so much regulatory uncertainty. So to what extent, especially for a company that works so closely with institutions, how big of a catalyst will that clearer regulation be? Is it just regulation that institutions are waiting for, or is it regulation and something else? Regulation and more innovation, regulation and more use cases?
I think a lot of times people say it's unclear regulation around crypto, but I actually think there's an unsolved problem that isn't related to crypto. It's global regulation, right? So here in the US, we have the world's largest financial markets. We have the world's largest securities trading engines. The US is looked at as the leader in this space. You know, a lot of people talk about China's economy, but remember, China's stock market's about 20 years old, and it's nowhere near the size or capacity of the US market. So from a competing side, there's not much there. But when it comes to crypto, software has come into the space and made it so that anyone can start to create monetary products, security products, etc. And all of a sudden, those can come from all over the world. And they can be traded on computers, and they can be accessed by computers. Regulators have not ever had to solve the problem of how do you deal with kind of this complete openness that transcends borders. That problem needs to be solved because of the internet, because of computers and connectivity. And it's challenging. And so it's opened up questions we haven't really had to solve before, and that's why it's so hard.
I want to quickly get your take on the Bitcoin ETF, the spot Bitcoin ETF, and the SEC continuously delaying its decision on that. What do you make of how the SEC has handled that so far, and when do you think we will get a spot Bitcoin ETF?
Look, the SEC has done Americans a real disservice by not putting together an ETF. There's no reason not to have an ETF. I know there's questions about, you know, does it meet all of these bars that the SEC sets forward for good reason? It absolutely does. But you know, here's the hardest part to get your head around, which is that the SEC actually has approved a Bitcoin futures-based ETF, which is, you know, clearly an inferior product by any measure. It puts investors at risk in strange ways that are really difficult to understand unless you really understand the futures market. And yet, that's been approved. All right, so a Bitcoin ETF would solve a huge problem. It would allow the SEC to have oversight, FINRA, oversight over companies that are managing these products. You know exactly where the assets are held. You know exactly how they're traded. It would fit within the existing systems. It would give access to Americans. Because they don't provide that, Americans are forced to go through other routes. And they're finding Celsius. They're finding Three Arrows Capital. They're finding Voyager. And you know, these are companies that didn't have nearly the same thing in place. People want exposure to the price of Bitcoin for sure. An ETF would solve that problem now, and there's nothing that really should be preventing it. So there's a power struggle going on here. I hope that it ends soon.
I want to end on education. You and I have both been in this space for a very long time, and I think something that's still true today is the amount of self-educating that is required to really kind of stay safe in this industry with this new asset class. When it comes to crypto, I think it's easy to get someone in Silicon Valley or someone who's a little bit more tech savvy or ingrained in the tech world to jump on the boat of this idea of revolutionizing the financial services industry or money in general. What do we do about everybody else who might not understand the idea of self-custody or, like you said, might not necessarily understand the futures market the way an institutional investor would? How do we do education in crypto that's not just, you know, sending people large amounts of reading and then hoping that they retain that when it comes time to actually put their money down?
Well, look, there's a lot of work to do. We can build simpler solutions. I'm disappointed in the industry and in BitGo to some degree that we haven't completely solved the usability problem of crypto. But look, this education is coming, whether it's a hard lesson or an easy one. Americans have enjoyed a fantastic, the most reliable financial system in the world for the last 100 years. And it's created a very stable place where we've been semi-immune to a whole bunch of problems that happen in other countries routinely. When you have a banking system that starts to falter and doesn't service you well, or maybe goes out of business, maybe the government seizes assets, these are things that have happened in not distant past in Italy, in Greece, in Argentina, in Colombia, around the globe. When you are subjected to those types of problems with your financial system, you start to get smarter much faster. Americans have been able to not think about it because we've enjoyed being the world's global reserve currency for a very long time, and we've had a really good economy. That's not going to happen forever. And as that starts to fade, in whatever fashion it takes, people have to get smarter. So I hope that as a society we can come together and get better financial education all the way down into middle school and bring that up. The industry needs to do a better job of educating. And then, of course, we need more market structure in place and make sure that we are putting at least a few safety nets in place. But in general, yeah, we got to get smarter, and it's going to take everybody. It's not like anyone can do this. You have to take it on yourself.
Crypto has come a long way from where it was just 10 years ago. Still a lot of skeptics in the world, though, that haven't quite jumped on, haven't quite warmed to it. And there are just some people that will always be that way. But how would you approach education with the skeptics here now in 2022?
Look, I just kind of disagree with the premise you set out there. I think when you look at the younger generation, there's no doubt. People are like, yep, this is coming. We are going to have digital assets. Of course we're going to have internet money. There's no reason we wouldn't have it. It tends to be, I think, the older generations that tend to struggle with it a little bit more. And as you know, the power system, as it is devised in the US, is largely generationally advanced. So I think that creates some struggles. But just play this forward for another 10 years. We continue to build. We be responsible. We take fiduciary responsibility for what we're doing. We get that market structure in place, work on usability. 5-10 years down the line, this isn't even going to be a question anymore.
Okay, that's all for Crypto World this week, but you can find that interview and more over at cnbc.com/cryptoworld. We'll be back on Monday, and we'll see you then.